Okay, peeps, welcome back. So today we're gonna be going over LTCN BCHG ETCG and HZEN and talk about how the markets have just kind of been dumping lately. So with that being said, let's get into it. So the first thing I want to talk about here is the portfolio. So you guys know that we're not just talking about these trusts; we do actually have them. So you can see the total initial invested capital over here. Still have some cash sitting on the side waiting to buy the dip, although it hasn't dipped enough for us to want to deploy that money just yet. But you guys can see just on the day alone, we are down quite a bit. So, but it doesn't really matter because we're still up massively. And the other thing I wanted to point out is over the last 15 months, this is how much money we have made in total just from crypto and or non-native cryptocurrencies and traditional stock swing trades. This does not include dividends or anything else that we may have in terms of income sources. So the markets would have to go pretty far down, and I mean like really far down, for us to actually be in the negative, as you can see, as you guys can see. So this combined with this number here, if we were to sell, the total would be just shy of 40K in total profits so far. But like we've told you guys before many times over, LTCN is definitely for sure going to, at a minimum, get to somewhere between $300 to $500 a share. I would not be surprised if it broke all-time highs. Same thing with the rest of these trusts. BCHG, as you guys know, the high for that is on at $60, and we're pretty much already 1/3 of the way there. So do I think we're at the top? No. As I said before, we have not had a true alt season, but what I do think is kind of a little sus, though, is the positions that we have the largest holdings in had the biggest dump today. I find that to be kind of suspicious. ETCG is kind of not really doing anything. We've been slowly adding to it, which is kind of a little annoying to say the least. And then HZEN has just kind of been sitting flat. As you guys can see, our cost basis is still lower than the market price, which is generally when we like to just hold the position. We don't like to buy like LTCN. We're not going to buy at $38 when we have a cost basis of 13, and we're not going to buy BCHG at $18 when we have a cost basis of 4, because what happens is when you add to a position that you're already massively in profit on, it increases the cost basis and decreases the potential profit. So we're not going to do that. So just so y'all know, we are experiencing the same thing you guys are. We are down today. So, we're with you pretty much. But anyways, let's get into the content here. So before I start this, there's a couple things I want to point out. Number one is the Bitcoin dominance. So we'll go over that real quick. I know this is not a Bitcoin video, but this does matter. Okay, it's important. So once again, we are still waiting for a breakdown of the Bitcoin dominance. When this happens, in my opinion, it's going to be after Bitcoin tops out, which is going to be sometime after the halving. And then if history is to repeat itself, once Bitcoin tops out, money's going to flow from there into altcoins, and then this thing is going to capitulate below this rising trend line here and the EMAs, and that's when the alt season is going to start. And why this matters is because when the underlines for these grayscale trusts start pumping, the grayscale trusts are going to start pumping. Okay, that's when the big money is going to be made in the grayscale trusts. I'm pretty confident of this. Okay. Another metric that I haven't pointed out to you guys yet that I want to show you guys is the Tether or USDT, basically United States dollar converted to the Tether dominance here. So pretty much what this is and what this signifies is whenever this thing is at an all-time high, that indicates that the bear market is here and people are moving money from cryptocurrencies into Tether. Okay. That usually happens along this trend line. It obviously does not guarantee that a true bear market is here. As you guys can see back here, this was Bitcoin's first peak, and then money moved into Tether and then flowed back into the market. So we had a second peak. The pandemic dump, you guys obviously know that was a V-shaped recovery. So it looked like we went into a bear market based on this metric, but that wasn't. It was like a 2-month long bear market. It was pretty much just like a flash crash. And this was the mini bear market before the actual bull run in 2020. So this chart can be a little deceiving, but kind of what's to be expected here is maybe like a short-term pullback in Bitcoin based on this and the crypto market, which is a good dip buying opportunity. But if we get a break of this trend line and it drops below this trend line, that could indicate a massive, and I mean huge, alt season, unlike anything we've ever seen. Just massive, okay? Because again, this trend line has been holding true since 2017. So if it breaks and we get a close below that, that's going to be a big deal for altcoins. Really big deal, okay? Last thing I want to mention before we get into the actual charts here is that are we surprised that there's a dump going on lately? Not really. I mean, the markets have been pretty generous over the last few months. I mean, we've been seeing pretty much nothing but nonstop gains. So pullback is kind of to be expected and almost normal at this point. Plus, there is also the pre-halving retracement. We generally speaking, sometime before the halving or even at or slightly after the halving, we do get some kind of pullback in Bitcoin in the crypto markets. And the last time that the halving happened, we actually kind of just chopped sideways on Bitcoin for about 6 months before we went to all-time highs. It didn't really do much of anything after the halving. It kind of just went like range bound within like, I think it was maybe 8,000 to 13,000, something like that, just kind of bobbing around, not doing much. So it would not surprise me at all if something like that happened this time around too. Okay. So pre-halving dump, great dip buying opportunity before the real bull run starts to happen, in my opinion. And I'm not the only one that thinks this. A lot of people in the crypto space also think the same thing. So now let's get into it. LTCN. We did point out to you guys that this control bar here could potentially be an issue. It's also a major psychological resistance zone. Like I told you guys, even numbers, like 25, 50, 100, 200, 300, 500, something like that. Very even numbers, especially when they line up with major resistance, support, so on and so on. It's going to be an issue to get past these. So am I surprised that we got rejected on the first attempt? Not really. Again, this is a control bar. That's the capitulation bar, the very last sellout before this thing finally finds its bottom. And then, I mean, you could call this a sellout here too, and it technically is, but we're not talking about like, oh, we're just kind of selling down a little bit. We're talking like massive dumps here, okay? So to give you an idea of what this one was, this was a huge dump. The candle, that one candle by itself was a 74% drop, okay? That's what's known as a control bar. So pretty much what it means is there's some basically the bears are just sitting there. A lot of bears are sitting there waiting to be like, oh yeah, come on, go ahead, go up to $50. We can dump on your heads, right? That's exactly what they think. That's how bears think when they trade. They wait for buyers to pump the price up to a certain level and then they dump on their heads. Does it always work? No. Sometimes the bears get squeezed and the price just keeps going higher and then they feel the pain of it. That does happen. So rejection on the first attempt, not a big deal. As far as I'm concerned, this is a shooting star candle, but again, the week is not closed. We still have 2 days, so there's no confirmation on this. As of right now, does it look bearish? Yes. Is it really bad, in my opinion? Not really. I mean, again, the top EMA is sitting at the support zone at about $26. I have been reiterating for ad nauseum at this point that it's possible that we pull back to one of these support zones. So there is that. Before we get into the actual targets here, let's take a look a little bit deeper at this. So the daily, we're again on the daily time frame, we're not even coming down and touching this EMA. Do understand that we have been respecting this EMA more or less for months at this point. So if we got another bounce off of this yellow EMA at about $36, would not surprise me if it just went straight back up. And on the 4-hourly time frame, once again, similar story to the daily. You guys can take a look at these EMAs here and see that the last time we even touched the blue one was all the way back here in March, and it went up a lot since then. And we're about to get something very similar right now to where it could hit 35 and then just go straight back up for another 2 months. That could happen. So in terms of targets, if this control bar holds and it is to go down further, it's possible it could go down to the support zone. So the support's going to be between $23.40 to $27. That's always a possibility. Are we going to freak out if that happens and it dumps another $12, $14 a share? Not really. Look, the plan all along was to DCA into crypto in the markets until December of 2024, which is this year. Okay, we did not anticipate, even with the spot Bitcoin ETFs being approved, that Bitcoin would be at all-time highs in March or April. Okay, we didn't think that was going to happen, but it did. So fortunately, we were DCAing in since 2022, so we already have our bags ready to go, so it doesn't really matter to us. But having that extra time to accumulate, if the prices come down, we're not going to be upset about that. We had already kind of priced that into our estimates anyways. It would not surprise us. In fact, we'd be happy to buy the dip. So that was kind of the goal from the beginning, to basically just DCA into 2024 until Bitcoin goes to 150,000 or whatever. And when it looks like altcoins and Bitcoin is just too expensive for us to say, okay, let's just keep putting money in, and we're looking at it and thinking, yikes, it's getting a little expensive. And I would say when roughly about 80% of our profits or 80% of our positions are massively in profit, 80% or more, then we would stop touching crypto and we would just go put money into something else and be looking to take profits. So that was kind of the plan. So not really stressing this, but so that's your support target. And if it pulls back, if you get your wish, it pulls back into these EMAs. The EMAs come up and meet the support while it's pulling back, which could happen. That's confluence. Just to get back up to the top of this wick, actually got to remeasure this. So to get back up to the top of this wick, you'd be looking at about 115%. Now, here's where the really juicy part comes in. So let's say we do get a pullback and you get a massive down here, which we're not going to buy because, again, our cost basis is way lower than this. But if you manage to get your pullback and it goes back up to resistance, you're going to get about 285 to almost 430% just to get to that next resistance zone. So massive, massive potential here. All right, so BCHG, this one is looking a little, well, I'm looking at that wick. It doesn't really look like anything obvious that would be clear rejection here, other than maybe this wick back here and some of these wicks. But I wouldn't really be, honestly, I wouldn't be seeing that as a major level. I think that, I don't think that area is really going to hold that strongly, in my opinion. I could be wrong. I mean, that's where this resistance zone is, but anything above this, until we get closer to the highs, I don't think it's going to hold too much. It does look pretty bearish, honestly. But again, we have 2 more trading days, so it's possible it could pull back into this support zone. Again, the EMAs are still below there, so they have yet to catch up. That is possible. Again, the EMAs are a reversion tool. So generally speaking, it serves as kind of a pullback indicator for price, which then indicates that it could go higher. So if it pulls back into support, that's going to be between 1030 to about 1250-ish. Resistance would be $18 to about $20, and the top here of the wick would be roughly about $24. Am I going to be buying this if it pulls back into this zone down here? No, I'm not. Basically, the plan is we're going to hold it unless it gets below our cost basis. If it goes below our cost basis, we're going to buy more. If it doesn't, we're not. We're just simply going to hold it and let it ride to the upside. Be patient. Okay. So if we get that pullback, it's going to be pretty large. Could be up to 44%. But if you got into this zone here, if you were patient, said, well, screw that, I'm not going to buy right now, I'll wait. You could be looking at anywhere from 56 to about 75%. That is possible. So the support beneath that is 680 to 755. Again, we still would not buy there because it's still above the cost basis. But I mean, it's possible it could come back and touch these EMAs. I would say not likely, though, considering this has turned into support here. So HZEN, still patiently waiting on this one to pull back if it's going to. Again, I would say that this has been confirmed as support, but it's looking a little iffy at this point. So the support zone below that is about $3.85 to $4, $4.20. The current support $6.90 to about $8, and then the resistance above that $11.20 to $12.30, and then the bull flag pattern is about $14.50. So those are all your price levels right there. I would say this support is probably going to hold, especially with this flag pattern. So if you manage to get in let's say at, I don't know, we'll just say at the current price, which is pretty much right in the middle of the zone. I mean, that's a sweet spot in my opinion. So you'd be looking at about 49% to 63.5% just to get up to that next zone. And if you waited until the flag target, which is entirely up to you, you'd be getting about 90% return. So pretty good gain on that one. So basically, if you put $1,000 in and it went up to the flag pattern target, you get $900 plus your initial investment back. So ETCG, this candle does indicate to me that the support and the EMAs are holding. As we said, there's major confluence here. Okay. Trend line is here, the channels here, the EMAs are here, the support zones here. It's very, very bullish structure going on here, all kind of perfectly lining up. So that support level is 1320 to about $16, 1760 to $20 above that. It could break down below all this. That's possible if like some kind of black swan event happens. Then the next level would be $3 to $5. If that does happen, best believe we are going to be aping it hard to this. Do I think that's going to happen? No. Honestly, I don't. I think the chances of that happening are probably almost zero. Not quite zero, but almost zero. So if you wanted to wait for a pullback, which it looks like you may have been too late, but it could happen, you'd be looking at about 26.5% to 42%. That's based on the candle wick low here. So GXLM, this thing is still in the pennant pattern, hasn't moved at all, really. The support is between 52.70 to about 58.90. Resistance between 73.60 to just shy of 96, or 73.60 to just shy of $95. So if you wanted to wait for like a little bit more of a pullback to get into the zone, I would say that's a little bit more ideal, but that's up to you. And then if it ripped, you get about 31% to about 69.5%. Oh, so one more thing. If it goes back to this lower support, that's between $4 to $11.50. That's kind of your macro low there, but I don't think at this point that's going to happen. So ETH, still kind of sitting in this handle here from the cup and handle. So the support is 25.60 to 29.50. Resistance is 40.80 to 47.50. The target for the cup and handle is 54.30. And if I zoom in here a little bit, if you guys can see the support below these, or kind of at the bottom of these EMAs, you'd be looking at around 17 to $18 somewhere in there. So if this candle closes bearish below this zone here, I suspect it's probably going to chop around in this handle a little bit. It might come down at some point down to this support zone, so keep that in mind. But if you wanted to wait for that, let's say you got in at $20, which is pretty much where the top of these candles are right here, you'd be looking at about 27.25% to about 44.6%. And from that same area to the next zone, you'd be looking at about 104% to 138%, and then up to the cup and handle pattern, target about 173%. The support below that is $2 to about $4.50. I don't think we're getting back there anytime soon, especially going into the halving. I would say that's more of a bear market target to potentially buy the bottom of the bear market, somewhere in there. So Zcash, this one is actually kind of starting to look a little bit more, now that we have some more data on this thing, it's starting to look a little bit more like a flag pattern. It's not perfect, obviously, but it kind of does look like a flag pattern when you basically include the bodies, which is pretty much what would be included. I don't really include the wicks, honestly. So have not confirmed above this resistance yet, so I would say the support is still down here between $4.30 to $5. You could say maybe around this EMA at like $6.30 a share. That's possible. So resistance $7.30 to $8. Until we get a green candle close above this zone, I would say this is still resistance. So if this thing were to drop down to that zone, you'd be looking at about 35.5% to about 46%. So that's a pretty big drop. It's up to you if you want to get in here. If you think this is going to turn into support up here and bounce, it's up to you if you want to get in. If you want to kind of mitigate the risk a little bit, you could just put a little bit in now and then DCA down until it gets to maybe this zone down here. Or you could just wait and say, well, I'm just going to go ahead and put all of my money in down here at the zone. That's up to you. So assuming that it does pull back into the zone, we'll just say you get in at the bottom of the zone. Obviously, it's very hard to time exactly when to get in, but if you manage to get it, great. So 68 to about 86%, and then to get to the top of that wick up there, you'd be looking at about 135%. So GSOL, this thing is kind of stalling out a little bit. It's still sitting above the EMA, so I would say that's bullish. But again, this thing is pretty overextended at this point. Just to give you an idea of how big that drop would be, just to get down to the blue EMA is about a 34% drop. To get to the top of that zone is about a 49% drop. And to get to the bottom of that zone, about a 57% drop. So it's not as risky as it would have been like way up here, but still pretty risky. So, enter at your own risk. It's up to you how you want to do this. I would personally not be touching this thing until I got back to the zone. As you guys can see, this wick came down to the zone and it just blasted off like a rocket ship after that. That indicates that this zone is a very bullish area and a good place to get in. So if you manage to get in somewhere in the zone between $175 to about $200, you'd be looking at a pretty juicy gain here. So just over 200%. Mana, so this one is still kind of stalling out, not bullish, not bearish. It's just kind of sitting in this triangle pattern. Again, the target for that's going to be roughly about 79.25. I would say if this thing does close bearish, especially if it closes below this trend line, do expect it to come back down somewhere between these EMAs and the support. So support is 17 to just shy of $20. And I'd say the blue EMA might be a good place to get in. So pretty much the top of that wick. That might be a starting point for a DCA entry, roughly around $25. So from that $25 level to the absolute top here, you'd be looking at about 212%. And then from the support zone, assuming that it does come back down that low, you'd be looking at about 320% on that move. So GBAT, this one does kind of have like a triangle looking pattern here. I haven't drawn it in yet, but it does somewhat look like a triangle to me based on looking at this chart. I would still be waiting to get in at the top of these candles. That would be when I would start to enter this trade. So about the $10 area, it could pull back to the zone down here. That's also possible, although not likely because the EMAs are above it. But that zone, just so y'all know, is 430 to roughly about 520 a share. So let's just assume that you got in somewhere between the red and the blue EMAs, which is pretty much about where I said that $10 target was going to be. Once again, the move would be roughly about 250% to the upside. And G-Link, this one is very indecisive. It's up and down and all around, and it hasn't made a choice yet. So based on all of this, I would say that it could likely pull into support. So support's going to be somewhere between $67 to about $85. If you manage to get in somewhere in there, you'd be looking at, let me remeasure this so I can give you guys an accurate estimate here. So the move could be potentially around 195%. So, I mean, pullbacks are going to happen, guys. It's normal. Markets aren't going to go up in a straight line. They're not going to go down in a straight line unless we enter into a crypto bear market or some kind of flash crash like a black swan event happens. Then potentially it could go straight down for a while. Or in a parabolic bull run, it could essentially go straight up with some pullbacks along the ways. But crypto is very volatile. I mean, it's not going to go straight up in a line. Nobody ever said we were going to go to $1,000 LTCN in one day. Okay. We've been in crypto for years. We know how this works. It's going to take some time. We're in the markup phase right now. Like I said in previous videos, what that means is we're essentially starting to move up more gradually, but not suddenly yet. Okay, remember I used this illustration before: slowly, gradually, suddenly. Slowly was last year until we got the Bitcoin, spot Bitcoin ETFs. Now altcoins are gradually moving up, and I think that we still have the suddenly phase yet to go, which in my opinion is going to be sometime after the halving. If history is any indication, I would say it's probably going to be closer to December of this year. So anyways, hope you all enjoyed this content. Please like, comment, and subscribe, and we'll see y'all later. Peace.